Hi folks, I'm doing this video update for one of my members, but I may as well just put it up on YouTube very quickly without bells and whistles. So this is natural gas day chart at the NYMEX Henry Hub. The question is whether it's going to carry on moving up and lock out everyone's opportunity to buy and those who are trying to get rid of short hedges. We've broken above the 78.6% fib. We're heading up towards that swing at about, well, just under 3.2. So the question is, do we want to take some profit? We've taken a little bit already. How far could we get? Naturally, we're above the 786 and this conglomeration of support and resistance over here. That means we'll probably power on upwards. We just got to overcome this current level and get up to that level at about 3.15, maybe just a little higher. However, if we're bullish, we probably still need to pull back a little bit. So the natural levels are these Fibonacci levels below us, and the bottom of this gap, of course, that was the rollover gap. The top of the gap is about 2.75, roughly, give or take a cent or two. A sensible place for a pullback would be to the bottom of the gap at about 2.65. We can also draw a trend line in there. Let's put this one in quickly. And so a trend line would look something like this. And notice if we sort of dribble down and drift sideways a little down into that 2.65 level, we'll get to that trend line as well. So that's a good zone to perhaps buy at. And also the 20-period moving average will creep up to that area too. This is the day chart. So let me just draw my squiggle on here. So something like this, like that. Sorry about the bad drawing. And now we can zoom into the 4-hour chart, and that squiggle is going to look absolutely terrible, of course. There it is. But that's the sort of thing, just to gauge it on the shorter term charts. There's the trend line that we had on the day chart. There's that support level, bottom of the gap over there, and another support level down at about 2.5. So somewhere between 2.65 and 2.5. On the Henry Hub, we're currently trading at 2.92, so we could have quite a steep pullback. Bear that in mind if you're thinking of hedging or going short. Don't go now, wait for a 4-hour reversal candle. We don't have that yet, and we're still holding above the 78.6% Fibonacci. Bear in mind, the rollover gap doesn't necessarily need to be tested at all, or even in the near future. For me, I'm holding about 50% of the longs. I took it around about $2, and I'm looking to add those 50% back on if we get into those dips down to about 2.65 and maybe 2.5. Well, I hope you found that useful. Have a great trading day, and I'll see you in the next video.